to reach the 270 required to win the White House as vote counting continues even today, almost 3 to 4 days after the election day. Democratic presidential candidate Joe Biden gained more ground on President Donald Trump in the battleground states of Georgia and Pennsylvania today, edging closer to the White House hours after Trump falsely claimed the election was being stolen from him. Something really incredible happened in the United States. The U.S. media cut the President Trump press conference. That never happened, and then all the hosts explained that they cut the press conference because he was saying false, he was giving false information when it comes to the election process in the United States. Anyway, we're going to focus on the energy market because, as I said, situation over there is pretty interesting. I want to bring to the show Youssef Al-Shamari, CEO of CMarkits. Good morning. Thank you so much for joining us, Youssef.
Hello, Alexander. Very pleased to join you.
So, Youssef, did you expect that we're going to have that kind of problems when it comes to the United States and the election process, because it really takes too much time?
Well, the U.S. elections has been very unusual this year. I remember 4 years ago when President Trump was elected, we didn't have that much of, I would say, chaos in terms of validating the elections, and it's taking much more time for certain states to verify their results. And also now, as we also can see in the media, President Trump is also accusing some states of, I would say, wrong polls or whatever. And he is planning to go to the Supreme Court. So that raises kind of the uncertainty on who is going to be the U.S. president within the next few days. Yet, I do think that Biden, as it seems to be, will be the next president of the United States, given the numbers that he has been ahead of President Trump in many states, and the large difference between the two. Yet, if we look at the oil markets, I don't see actually a major impact on giving Biden, as the market is expecting Biden to be the next president. Currently, the market is just focusing on COVID-19 situation, especially in Europe, demand pictures in the US and India, and also the things like the US dollar. And the US dollar is still weak, and that's what has also been keeping the oil prices a bit resilient, despite the uncertainty surrounding the U.S. elections. Also, OPEC Plus, also an important factor in here, and the Russians seem to be going ahead with a plan to extend the current cuts into 2021, at least Q1. And that I think these factors have been supporting the markets over the past few weeks.
Right. I was wondering, what are the different scenarios that you have outlined for the crude oil market, in particular, if Biden is going to be the next president, which is the most likely scenario so far, because he only needs 6 electoral votes, which is just one state. And so far, he's in advantage in 2 states. So this is definitely the most likely scenario. Of course, we never know. But what do you expect from the energy market? Because, something surprising is that we saw a major increase of crude oil price in the past 2 days when markets kind of figured out that probably Biden is going to be the next president. How do you explain that?
Well, our expectations for the oil markets, if Biden becomes the next president, there are some bearish factors that will come as along with that package, and there will be some bullish factors. If we consider the bearish factors, that could be negotiations with Iran over its nuclear deal. That could mean return of Iranian crude oil production, more than 2.3 million barrels into the markets. And that could, if demand doesn't grow, at least for now, with COVID-19 now pressuring on the demand pictures, I believe that could have kind of a pressure on prices. Also, things like removal of sanctions on Venezuela, and that's another possibility. So, bottom line, I would expect more supplies coming from some OPEC member states. On the other hand, Biden is planning to stop or limit the licensing for U.S. shale oil productions in terms of fracking on federal land. And here there are 2 scenarios. The first scenario is that people are expecting that this will only affect offshore explorations, where hydrofracking operations are conducting, and that could lead to 170,000 barrels reduction, but I think within the next 10 years compared to with that decision not being considered. But a major shale oil producer, Pioneer Natural Resources, has just mentioned that the impact of this decision can be dramatic. And personally, I do think that we may not see shale oil rising to 13 million barrels as long as Biden is in the presidency, as what we saw beginning of Trump presidency and perhaps even towards the end of Obama administration. Also, I think that so that could somehow support prices. I also expect negotiations between the U.S. and China, and that could support the Chinese economy, leading to an improved demand, especially from China. And I also think that Biden will not limit the rise of crude oil prices. Let's compare between the two presidents. President Trump has never been supportive of oil prices rising above $60 compared to Obama. While during Obama time, prices went well above $100, and that has been a key supporter, by the way, to the development of renewable energy technologies between 2010 and 2014. Also, this has massively supported the U.S. shale industry. In fact, it has been the major driver for the U.S. shale boom. So these are let's say, the two scenarios: the bearish picture and the bullish picture for Biden impact on the on the oil markets. Of course, I can also talk about the energy sector in general, but I just would like, I'm not sure if you would like me to highlight that.
Yeah, so I was wondering, after what you've said, there are some positive scenarios and negative scenarios. But in any case, you're saying that Biden as a president is not the worst case scenario for the energy market, right? Is this what you're saying?
Absolutely, absolutely. As many analysts have been predicting that decline in crude oil by $5 to $10 if Biden gets announced as a president, and I never thought of that. Given the most important factor that the market now is looking at is actually COVID-19 and demand picture. And in fact, even if Biden negotiates a deal with Iran, I don't think that, because given there could be other decline in supplies from the U.S. industry, and that could offset the impact.
Well, that's certainly very interesting. What about the possibility that the United States would be back in the Paris Agreement and Biden's plans to move towards renewable energies? This is a very expensive process for the companies, no doubt about it. Energy transition, in my view, is happening anyway, whether it's under Biden or under President Trump. This is correct, but not fully in the United States.
Absolutely. But here, talking about the U.S., there has been a major driver among the U.S. businesses, supported by companies like Apple, who had carbon neutral targets. And major companies, even BP now, as we know, is also having a huge green energy agenda in the next decade. Yet, certainly when the U.S. is a part of Paris Agreement, that will also be a big boost for global climate targets. Yet, I don't think the ambitious target that President Biden is planning to achieve can be achievable within 4 years. That's one factor. The other factor, looking now at the Congress, now it's the Senate is expected to have a majority of Republicans, and that could be another barrier for achieving Biden's agenda when it comes to the climate.
So let's talk about a crude oil market. Specifically, what are the best case scenarios until the end of the year when it comes to price fluctuations? What are you foreseeing?
Well, currently, crude oil prices are, as I mentioned just a moment ago, they are impacted mainly by the demand pictures and the lockdown that we are seeing in Europe. And there's a possibility that the second wave could also spread to many countries out. In fact, even in the Middle East, many countries are imposing lockdown measures, and that's affecting greatly the demand for gasoline. So that could keep prices fluctuating between 39 and 42 for Brent between November and December. Yet, I do think that if OPEC Plus decides to have a kind of a longer extension, let's say between 3 to 6 months, that could somehow bring the prices slightly to about between the 45, let's say, and $42 for Brent. Yet, I don't think prices can be can go towards $50, and even in 2021, given the situation of COVID-19, and I don't see a demand coming back to its pre-crisis levels until a couple of years from now.
Well, yeah, that's going to be certainly very difficult. Let me ask you one final question. We've been talking about very different factors when it comes to the energy market. From one side might be US elections and possible new president. Then it might be China. Then it might be COVID. Certainly COVID is very important, but which is the most important one, and what are you looking at?
Well, COVID-19 is currently the most significant impact. If a vaccine gets announced within the next couple of months, as we hope, currently Oxford University is on the brink of announcing a vaccine. So if that happens, I do believe that that could be a very good boost for the market. Secondly, Chinese economy. But Chinese economy is already having a very good recovery. In fact, China is the only country that has been able to achieve a smooth V-shaped recovery compared to any other nations. Also, the only country that has been able to achieve economic growth, looking at the other countries in the world, are all scoring recession. So, but further development in Chinese economy will also be a good factor. Yet, I think COVID-19 situation is currently the most important factor.
All right. Thank you very much. Youssef Al-Shumari, CEO of CMarkits. Thank you for joining us. Have a great weekend, Youssef.
Always a pleasure, Alexander. Thanks for having me.
Thank you once again. Well, I just want to have a very quick look at the situation with the president.